So, hello guys, good morning. How are you doing? So, as we look at these trades, these are very small things. I had initially promised to give you guys lessons on how to create robots and indicators, all those things. But I didn't seem to get time. So forgive me for that. Well, let's first leave that at that. Currently, I have a running indicator that I use, personally made, but all those are things maybe you should know about when you already know about how to trade. So as we go by, I want us to look at this analysis and understand why trades moved like this and how it happened like that. So of course we first look at the higher time frame. So that's the 4-hour time frame that we are seeing currently of how each and everything played out. So when you look at this higher time frame, what do you see? I told you I trade support and resistance, and all indicators I've created are based on support and resistance. So when you look at what is happening here, what do you see? According to me, here price has really played around with us for very long, like very long. If I told you, you see the previous high that was broken, this point here, this was the initial high that we had on gold. It was 4,379, but that high was broken, I think last week. Yeah, it was broken last week. And when you look at such moves, you would really get scared because not everyone is actually ready for it. When it was broken, I didn't trade gold. Why didn't I trade it? I didn't trade it because I saw we were going into a region of uncertainty. Either you keep holding your buys if you have the capital, or price may just violate you, So I want us to understand what happened. I told you I trade support and resistance, and usually without a resistance point, I can't seem to move, I can't seem to move. But the good thing with support and resistance is that you always have indicators that you have to look out for, You have indicators that you have to look out for. And some of the biggest, let me first turn off this indicator here. Some of the biggest indicators that you look out for when you actually trading with support and resistance are the reversal candlesticks. What are reversal candlesticks? Reversal candlesticks are those candlesticks that show you a stagnant move. Usually they are the beginning of the consolidation wave, and they are the end of the consolidation wave. So whenever I look at a reversal candlestick, I just know there's going to be a change in the momentum. Trading is going to change. The trend is going to change. That is how I tell. Let me try pointing out some of these reversal candlesticks. We are in the 4-hour time frame, not that. We are in the 4-hour time frame. Some of these reversal candlesticks, you would see it here. This is one of them. Wait, let me just get this. This is a reversal candlestick. That one candlestick in the middle there. The last 4-hour candlestick that happened on, is it the Friday of last week? Yeah. That was the last reversal candlestick we received. And what did it tell us? It told us that price, although price had created a high. Although price had created this high, it could not, it meant that buyers could not continue holding on for long. So with that said and done, if they could not hold on for long, what will happen? Of course, sellers will move in. And the best thing about support and resistance is, may I have two moves now I look at. Whenever a region has been set to be tested, it will be tested at least twice. A support will be tested at least twice. Once it has been tested, once a reversal candlestick region has been tested, then price will move on. Let us move to a lower time frame, let's say 1 hour, and look at how it played out. So this is our reversal candlestick. Why am I saying on a 4-hour time frame? This was our reversal candlestick here. And when you look at this reversal candlestick, no one expected it to be like that, you see? No one expected it. However, price had created a high that it had to come and retest back again. I hope all of us are seeing that. This high was retested before the second wave of sales. And this happened very early in the morning at around 2 a.m. That was the first wave of sales. When that first wave of sales happened, I'm on the 1 hour time frame. We got an indecisive candle here. It was a doji, mostly a bearish doji. That was the move. And of course, a doji is a reversal candlestick. That's one of the things I'm trying my level best to tell you. Reversal candlesticks always tell you change. They always tell you change. Change. See that? So when this reversal candlestick showed up, what happened? The momentum changed. We were looking at sales. That's how it played out. When we got to this reversal candlestick, it came back up. Let me first want to bring it back. So when the momentum changed, tell me why price decided to break at that point. And for those that do not know the strategy, this is support and resistance, and some of the main reasons why we had this move here is that we had a reversal candlestick there as well. And with that reversal candlestick, we had a confirmation candlestick, also the same, because whenever I'm trading, I look for reversal candlesticks. Whenever I see a small change somewhere, I look for reversal candlesticks. Could that reversal candlestick happening there might have been following another pattern from another candlestick? You see that? So we had this reversal candlestick on a 1 hour time frame. There are quite many because there was a bit of consolidation on the 1 hour time frame, especially on Friday. There was so much consolidation. So I looked for just one candlestick that was there, and when I got it, that became my resistance. That was the confirmation I needed. You see that? And of course, we headed out with sales. We headed out with sales completely. Of course, now someone would ask me, why is it that when price reached this region, it decided to do what? To consolidate a bit. That's a very easy question to answer. So, me personally, if I look at such moves, I would know that institutional traders were trying to hold on to certain people, especially those buyers that were thinking they could manipulate the market to go back high. No, they waited for most of them those open positions at this point here, those open positions at that point, and some of them were taken out there. See that? There was that consolidation because of that. And when price fell, we are looking at this candlestick. This candlestick is nothing special. However, I'm going to explain it. Let us come back to 30-minute time frame and look at what that candlestick is telling us. So when you look at the one as in the 30-minute time frame, you're going to see that this candlestick is still, it's not something, you know, special. However, prior to it, it is seated on a region where price has been playing around so much. And of course, any bounce of price can either be a support or resistance or a mitigation point. I don't know if you guys understand what mitigation is, but yeah, that is generally it. That is generally it. And as we are looking at all this, we do understand one thing, that all these movements follow a certain impulse. If you know how to understand, how to point out these impulses, then you are at an advantage, you know. You are at an advantage to make more. So some of the big moves we are going to be looking at is this wave of sales. We had some very crazy news yesterday, and for those that were watching it, you saw what it was doing. You saw what it was doing, and this started at the New York Open. The New York Open. So that was the wave of sales, specifically timed at the news that was happening during that time. So tell me, how best can someone tell all this? Let me first remove all these drawings such that all of you see what moves are going on here. And let me turn on my indicator. So this is an SMC flip labeled what indicator, specifically made by me. So this, I'm going to give you a brief description of how this indicator works. This indicator will give you sells and buys, you know, just showing you maybe probably where to buy or sell, buy or sell, buy or sell. So generally that was it. I wanted to give you a brief explanation on this indicator. So this indicator gives you sells and buys, maps out support and resistance points based on mitigation and what, and reversal signals. So this is a 30-minute time frame, and this was the sell signal that was given. It mapped out a region of resistance. This is the same thing I told you guys. It mapped out a region of resistance that me myself had not yet minded to look, that I also saw. You see that? So when this region came up, it was in a 30-minute time frame. This was a reversal candlestick. See that? The highest candlestick that showed up on a 30-minute time frame on gold was a reversal candlestick. What does that tell you as a support and resistance trader? We are going to have big moves that are coming up. See that? When gold went back down and then went and retested that very same candlestick, what happened? We had a sale. We had a sale. You see that? The moment gold came and retested that previous high, we had a sell. And you're going to ask me why it did not map out these regions. I'm coming. It came here, came back here. And if you look closely, you would fully understand why it worked at that point, why it worked at that region. Because we had reversal candlesticks at this point. If you look at them closely, we had reversal candlesticks at this region. And that is where we got our sale. That is where we got our sale. We got 2 sales yesterday. We got 2 sales. The good thing with this indicator, the moment it senses that, the moment it starts sensing that trades are still in a downtrend, it will give you, it will give it to you. Of course, the price is still high. That's why you're seeing on this table and trend, time frame and trend, that the 15-minute is downtrend, the 1 hour is downtrend, the 4 hour is bullish, because now those are now big numbers that we are looking at, But generally, when you look at these trades, we got the first sale, the second sale. And remember, all these sales come out when they have already mapped out a resistance level. If you see a buy that has come out and have not mapped a resistance level, forget it. If you see now let's take an example of this buy here. This buy came up and had already marked out the support level. That is why you had an uptrend here. Now currently we are in a downtrend. Why? The resistance level has been marked and price has been pushed down. You're going to be asking, what are these flip zones? Flip zones are mitigation points. Points where institutional traders wanted to move their market, but quietly. I don't know if all of you understand me, but that is how it has been. And for anyone that is looking forward to trading more, reach out. Inbox me, let us talk. Let us find out what you need, what services you need. I do account management, but that is for only people that really are serious, because account managements have a lot of issues concerned with them, Some people just be putting you on pressure for no real reason. Okay, with that said and done, thanks for attending this live.